Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, November the 12th, the year's 2019. Let's talk trading. First principles trading, part 5. I received an email from this one trader who's been sending me emails about the Wick Zone and whether or not it works and whether or not anybody uses it. And I replied to him last night. I said, something I've been telling traders for a long time, decades. You have to trade what you see. And what I mean by that is if you can't see how something works in trading, if you can't understand it, I don't necessarily mean see but vision, but see in your own mind that this'll work and this can possibly work for you, then you have to find something else. And I'm not here to force anybody into using my methods. I just offer them out. And in particular, when it comes to first principles trading, you have to understand something about trading. Trading isn't a start stop type of game. It's not like poker where you shuffle the cards, you deal them out, you play the hand, and then it's over. No, 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 no. Trading is continuous. It's ongoing. You can jump in anytime you want and jump out. That's something that you can control when you enter and when you exit. And in fact, we're talking first principles. There was a document I wrote. In fact, I didn't realize how long ago I wrote it. All you need to know about trading. I wrote that thing 10 years ago, but it pretty much stands the test of time. But, and as I've mentioned before, the reason you enter a trade has no bearing on the outcome, okay? And I've talked about that you can control the size of your loss, and that's all about the stop loss. And that's a skill. You either practice that and put that into play every time you trade or you don't. The thing is, you can't control the size of your win. So anytime you win, it's luck. I know I catch a lot of flack over that, but once again, this is my belief. This is how I view it. But if you really, really, really think about it, if you can't control the outcome and the outcome's favorable, then you got lucky. And one other thing, you need to know when to pick up your chips and cash them in. Just like in poker or anything else. There's a time when you just need to say, okay, enough, I'm done. For the moment, it can always come back. But if you just keep pushing it, keep pushing it, keep pushing it, you could experience giving back all the chips that you've earned. Now, that trader said that I made a wrong assumption. I assumed that, and I guess maybe I read it wrong, that they had made 8 pips and then they lost. They're saying, no, they lost 16 pips, then they made 8 pips. Now, here's the thing, expectancy, okay? Even though this is the expectancy equation and it talks about probability, but the thing is, we know in trading there are no probabilities, only statistics. But the actual equation is probability of a win times your average win minus probability of a loss times the average loss. And if that number isn't positive, then you're going to lose. So like in Vegas, and I guess New Jersey and anywhere else there's a casino, the casinos have a positive expectancy. Small, but because of the large number of dollars they deal with, millions if not billions, they come out ahead, and that's why they have these really fancy hotel, casino, lavish places, because they're taking, people's money because of expectancy. Now, that being said, if you have a TP of 8 pips and a stop loss of 16, you're setting yourself up for failure. One thing about stop loss is if you see prices really going against you, There's no reason to let your stop loss get hit. Just scratch the trade early. Just cut it. Yes, yes, yes. It could turn around and go your way and you could be kicking yourself, but that's hindsight. You have to react in the moment. So if you have this 16 pip stop loss but a 8 pip TP, you're just setting yourself up for failure because that means you're going to have to win 2 out of 3 trades forever, and that's just to stay even. So it just, that is just failure. So once again, fellow trader out there, if you're watching this video, listening to it, if the Wick Zone doesn't work for you, move on to something else, okay? Because remember, you cannot control the probabilities of winning and losing, and you cannot control your average win size. You can't. The only part you can control is your average loss size. And that's why you know what's coming next, the risk and money management. That's why it's so important. Because if you do this right, even if your method or system isn't that great, you get the money management right, you could hit a hot streak and you can make a killing because you will never lose more than you're willing to lose per trade. It's just that simple. Okay, so let's look at some charts here. This plain chart just showing 3 horizontal lines, the previous day's high and low, and the current day's open. And we're looking at an H4 chart right here on the yen. And you can see what it's doing here. Now, remember, the Wick Zone right here, you see this Wick Zone? What did price do? It went in and came out of it a couple of more times. And this is just on the H4. I mean, you look at the daily here. It went above, came below. So you can see here, you had a high of 28, and the previous day's high was, call it 25. That's only 3 pips, right? So if price is going up, you take it, then it just, and if you look here really closely, you see this? It went up into that Wick Zone and came out. So what's it telling you right here? What is it telling you? It's telling you it doesn't want to go up. See, it didn't even crack this wick right here. I mean, so if you can't see this, don't trade it. You have to, and this is part of trading. I mean, if you want to put a pending trade and walk away, then if you haven't done this, if you haven't analyzed this right here, then you're just setting yourself up to hit that stop loss. I mean, is it a set and forget? Not really. No, this is not really a set and forget. This is for people who want to sit there and, churn out the trades. Sometimes it'll take off, but if you can just look here and see a lot of especially with the yen, you can just look here and see we're not talking about, those 100 pip trades, especially, going long at the top or short at the bottom. Now, coming out of the bottom wick zone, going long, or coming out of the upper wick zone and going short, different ball game, especially with the yen, the way it's been behaving lately. So I hope that makes things clear. Please let me know. And I would much prefer traders respond to me either on the YouTube messages or Facebook, so or on Crestlick.com. That way, other traders get the benefit of the Q&A, you picking my brains, me answering your questions. Because if we do it in email, then it's just between me and you, and nobody else knows what we're talking about, right? Gap fills, we still have 3 open gaps. We're only down 53 pips from the yearly open here. And you can see we busted out of that range here of yesterday, which was the first trading day of the week. You can see right there, then it came right back into that range. So we'll see what happens for the rest of the week if price can get out of that range. And also, if you think about it, if you think in terms of spread, right now I believe the dollar yen spread is only like 1 point something. I'll have to bring up one of the charts that has the spread on it. But if you start thinking of movement in terms of spreads, it's like, hey, it moved up a spread, it moved up another spread. Or if it fails to move up two spreads, then chances are maybe price is going to reverse on you. It's just another way of thinking about it. Okay, how many opens are we above versus how many we're below? Right here, you can see we're above 5 opens. Here's the October open. I still haven't put in November. I have to remember to do that. Let's do that right now. And there's November. Okay. Go through these charts quickly. I got about 3 minutes left in this video. Price action, pivot. We took out yesterday's pivot here. So we still now only have 2 missed pivots. We hit that weekly pivot and reversed. I think I showed you that before. Price action. Once again, price just doesn't like staying between lines. But here again, we're only talking sometimes only 2 or 3 pips. Sometimes we're talking, 10 or more. Wick zone, perfect example. It dipped in the lower, hit the upper, and then out. I mean, these are trades you can make. So sometimes, depending, going long out of the lower and short out of the upper might prove to be more profitable than that daily break. But it just depends. It's on price, but you have to trade what you see. See, here price went into the wick zone, but came back out here, in and then out. So if you can't see how to make money off of this, do not trade it. High-low lines, you can see here, prices dipped down about 0.5 pips. Einstein line, just about ready to take a trade here, short. We showed those wick zones and the ATR zones. Okay, today we made to the halfway point. Once again, if you think about physics, if between here and here is a full ATR, then from here to the high or here to the low almost has to be at least half an ATR. Otherwise, it's not going to hit the ATR. And that's why I do ATR minimums and maximums as opposed for periods for 2 through 14 days, whatever the min and max is, rather than just pick, say, like an ATR 14 or ATR 5. I want to look at the range here so we can get an idea. Because it's much better to target range than target specific prices. There are some exceptions that work pretty well, like pivot. But that being said, I like to look at things like the ATR and the ranges, and that's why I like the wick zones, because it's also a range. So, fellow traders, I hope you understand it. And that one particular trader, I hope you understand that if you can't see the wick zone, then try a different system. But, there are people I know, they said trading hasn't been easier. You can go out there and see their comments. So, but you just have to find something that works for you, because it's not what you trade, it's how you trade it. So go out there and drain the banks.